All right. Hi, good afternoon. Welcome to another edition of the Fab Money Ladies Alive. We are here today with Brenda St. Armand with Mortgage Sense. Hey, Brenda, and Chantal Traversy of the Messaker Traversy team with Exit Lifestyle Realty in Barrie. We are here today to talk about the changes to the CMHC guidelines that came out earlier a couple days ago, and also sort of comment on the current real estate market and talk to some of the headlines that have been coming out, and how does that impact the more local areas. So Brenda, why don't you start us off, and you can comment a little bit on the CMHC guidelines that came out.
For sure. Yeah. I mean, one of the reasons that we wanted to put this live together this week is there's been a lot of really big headlines over the last couple of weeks, right? Talking about, projected drops in values in real estate and some major changes that CMHC has made to their lending guidelines. So I always find that you have to take these things with a grain of salt, right? And Chantal, you'll absolutely talk more to this when we talk about real estate values and what's happening in the local market.
Yeah.
As far as the mortgage rules are concerned, so CMHC has basically made three major changes. So the first one being, and I'm going to go from least important to most important. So the first one being that they've removed the flex down program. So this was a program where you could actually borrow their down payment as long as they could qualify for the payments on top of their mortgage. So that is no longer available. Honestly, it wasn't a program that we found a lot of people were taking advantage of. So it's minimal impact. The second change that they made was they've upped the minimum credit score that people are required to have in order to qualify. So it used to be 600, it's now 680. So that's a pretty big change. A lot of people, I think, as we've seen debt increase in the past few years, credit scores have started to get really impacted by higher balances and sometimes late payments. And then the third change that they've made is their debt servicing ratios. So you used to be able to get a mortgage for up to, so 44% was the percentage of your income that you were allowed to put towards debt, 39% of that being towards your mortgage, right? So the 39% would cover your mortgage payments, your property taxes, and there's usually a heating component. So where the ratios used to be 39-44, they're actually dropping them now to 35-42. So that, to me, and most of us in the industry, is going to have the biggest impact on people.
Yeah. Now, Brenda, can you comment, do these guidelines apply to everybody, or just people applying for CMHC?
No, so when you have to have CMHC insurance, so if you're purchasing a property and you have less than 25% or 20% saved as a down payment, you have to have insurance. Now, if you've got more than 20%, or if you're doing a refinance, you don't have to have CMHC insurance on your mortgage. But the other thing to keep into consideration is CMHC is not the only insurer that we have in Canada. We actually have three. CMHC is the one we hear the most about because they're the government arm, if you will, whereas the other two are a little bit more private. And we actually have heard in the last couple of days that the other two insurers, Genworth and Central Canada Guarantee, are not following these changes, right? So they're keeping the status quo. They're not changing their guidelines to follow what CMHC has announced. The caveat that I will put there, though, is that lenders still have the right and the ability to set their own guidelines. So even if a lender is choosing to send a deal through Genworth as opposed to CMHC, the lender can still say, I'm going to follow CMHC. So it's not an across the board. If you're not going through CMHC, you have to follow the guidelines. It does come down to what lender you're using and what policies they're following.
Okay. You mentioned the debt ratios. That is on gross income, right? Not net take home.
Yes. So, I mean, if you're a typical salaried person, say you make $100,000 a year for simplicity. So on $100,000 salary, your monthly payments on all of your debt obligations, so all of your credit cards, car loans, mortgage payments, or whatever, cannot be right now higher than 44%. So $44,000 a year. And then 39,000 of that is your mortgage payments and your housing costs.
Great. Okay, so that's great information. Thank you for that. And I think it's, people are going to have to take it into consideration, particularly those first-time home buyers. Now, Chantal, and well, Brenda as well, but can we comment on some of the big headlines we've been seeing about home values and stuff? So I'll let you guys take it away on that one.
I can start with that one if you'd like. So I find it very, very interesting whenever you look at the real estate industry and how much of a driver it is for Canadian economics and even global economics. For them to say that the impact of COVID, and like I've got Evan Siddall, who's the CEO of CMHC. Ooh, I'm going dark in here. His quote for the one that we're talking about. So he said, job losses, business closures, and a drop in immigration are adversely impacting Canada's housing markets, which stands to see a 9 to 18% decrease in house prices over the next month. So that's at a national level. Each market's definitely going to have its own impacts. Like if we take into sort of the key factors that are there, job losses and unemployment rates, and then immigration is going to be a huge one with what's going on in the borders being closed. So I think the metropolises are going to be affected a little bit more there. I know I was chatting with one of the ladies in the office. Her daughter just put an offer in on a house in Vancouver. That's a complete gut job. And she said it was $1,080,000. So is there affordability issues? Absolutely, 100%. But that's where you need to take exactly what Brenda had said and take a look at the local markets and see what's going on there before we jumped on this call. So when we take a look at Simcoe County, we're seeing actually an increase of about 7% over this time period last year. So I think one of the big things that this is doing is whenever the general public or whenever anybody is seeing these types of comments and statements that the housing market is going to drop 18%, it's creating some uncertainty and some fear in people, and they might be losing a little bit of confidence in the market. So if somebody's thinking about selling and they see that news, they're going to be impacted there, which might impact house prices. So I think it's definitely important that we keep educating and getting the information out about what the true activity is. So I'm also the incoming president for the Barrie and District Association of Realtors. And one of the things that we implemented for all of our members and all of our local realtors to arm them with all the information is instead of just doing monthly stats, because everything's been so changing over the last however much, I don't even know how long we've been under this for now. But we've been implementing weekly stats so that we can get a true sense. And it's great to see that the confidence is starting to come back. It's been about that since about beginning of May is whenever we start to see people's confidence coming back. Whether it was with the protocols that were put in place for personal protection equipment and all the procedures that we were taking there. Whether it was the lightening of some of the restrictions by the government, and especially with the new announcement with all the reopening today or for Friday, like I think we're definitely seeing the phones are ringing more, everybody's becoming more and more active. So like I said, average sale prices are up 7% over last year, and we've seen a steady increase in the average sale price over last year since the end of April. So that's good news to see there.
And I think a good point to make too is because of our proximity to Toronto, right? We have to take into consideration what happens in Toronto when you've got high unemployment and job losses and economic challenges. People move north, right? So whereas there might be demand in the city, that demand is increasing further north because, I mean, even maybe to us that our house prices are going higher, to someone coming out of Toronto whose house is worth $1 million and can buy something comparable here for 500, right? It's more economical, it's more affordable.
Absolutely. They can downsize their mortgage or any payments that they might have and then upsize in property. One of the other things, and I was just chatting with somebody about this earlier today, is that Simcoe County's real estate market is, it can stand alone on its own. we have a shortage in supply right now. So we were going, prior to COVID starting, we were heading into a hot spring market. Homes, we were seeing multiple offers again, and it wasn't as crazy as what it was back in 2016, 2017. But we were seeing there's a lack of inventory. So until all these new builds and all that stuff starts coming onto the market, and until municipalities start loosening up the red tape and allow for more production, we're still going to be in that seller's market. So basically anything that's under that 700,000 mark, we're seeing them selling quickly. And then anything sort of over that 700 mark, just your buyer pool's a little bit smaller for that. And those ones are taking roughly 21 days to sell. So that's the one thing, is that Simcoe County, we've got enough people that are here that need to purchase and upgrade or that are downsizing, that we can carry our own market here. But then we also add all the influx, like Brenda just mentioned, about everybody coming up from the city and the GTA. Like, there's a huge demand.
I really think with more work from home, like, just people like just are not going to be going into the office at all, or as frequently. So why am I in Toronto with a million+ home, and you can sneeze and touch your neighbor kind of thing, right? And I think there's going to be a huge move to other areas, whether it's Barrie or even further north or wherever. So are you seeing any of that yet or not?
Absolutely. So I'd say about 65% of the offers that we're seeing in our area the homes are being purchased by either out-of-town agents or by out-of-town buyers. So we are seeing, and we've been seeing that for a while now. And you touched on it. People are migrating even more north. So they're going to Midland, they're going to Penetang, because they're able to pick up homes for $400,000. And like, it's a great house for them. So, and then I'm sure everybody down in the city, especially those that are in their condos, are sitting there getting concerned with either the health and safety precautions, and they're looking at what they can afford up here, and it's a no-brainer for them.
Yeah, for sure.
Yeah.
Well, and Barrie always used to be sort of the borderline, right? Because the GO train stopped here. So if you did have a job down in the city, Barrie was about as far as you could move and still sort of get down there comfortably. Whereas now, if you're working from home, right, as long as you've got a strong internet connection, there's nothing wrong with Gravenhurst or Midland or Orillia, right? So major changes there, I think.
I'm currently in Huntsville, and I'm seeing it up here. Like, a ton of people are coming. If they can work completely remotely, or even work 1 or 2 days in the city, they're like, why? Like, I can own so much more and, be on the water or whatever, right? So
absolutely.
Yeah, for sure. I'm just gonna check here, guys, if we have any questions on the live, or if you do have questions, please throw them in the chat and we'll talk about them. Hi, Debbie. And
tell that sorry, I think we've got a bit of a lag there. I've heard a few, especially real estate investors, that they're looking at the headlines and stuff and seeing, well, if real estate values drop, then there could be some really good opportunities for getting stuff at a bargain. And I mean, my message to them would be to be very cautious about waiting on the sidelines too long. And Chantal, I'd love to hear your input on that.
So with the new regulations that and the new policies that CMHC has put forth for their underwriting, it's going to primarily affect first-time buyers. So if that's removing first-time buyers from those starter home prices, there's a huge window of opportunity, unfortunately, at the expense of those first-time buyers, that's going to become available. So like I said, we are in a seller's market for those lower priced homes. Anything that is even under $450 in Barrie is flying off the shelf. So I had a conversation with somebody yesterday where I said, you need to get your ducks in a row. Not you'll go out shopping and you'll go find what there is. Go get pre-qualified, speak to the mortgage professionals, get their input, find out, get all your paperwork in order so that you can go shop with confidence. And yeah, like we're seeing they're not, I'm going to say within even 3-4 days of being on the market, they're usually conditionally sold.
Wow.
Or in multiple offers and selling firm.
Great if you're a seller.
It is. Well, but then on the flip side, you're also buying, right? So there's a trade-off. So for those people that really want to profit right now in the seller's market, if you're selling your home and you're looking to downsize, they can definitely pull some equity there and put that in their pocket. But for those that are looking to upsize, it's a trade-off, right?
For sure, for sure. Kristen just asked, I guess, drop in values next month, or did you mean next year? So I guess maybe we had a terminology or a word mishap there. So it was.
Sadal's quote was that he expects to see Canada's housing market drop 9 to 18% over the next 12 months.
Okay.
Yeah.
All right.
So.
All right.
But I think as we've clarified, we really don't think that's something that we're going to see in this area, right?
No.
No.
Like there might be, well, and this is the other thing too, is we can look at everything right now and see how the market is doing right now, but we won't know the full impact that COVID has had until Q3 and beginning of, well, and even Q4, and then going into January and the winter of 2021. So it's going to be interesting, and that's where we're trying to get out as much information as possible so that people know the facts and they know what's happening with the market.
One of the big things that's affecting, I think, the pricing here and the fact that, you know, things are flying off the shelf is there's still a really low inventory, right? I mean, I think a lot of people just sort of stepped off onto the sidelines to sort of wait and see what was happening. Like, do you feel that the inventory situation is going to get better, that we're going to have more of a normal spring market where there's going to be an influx of supply coming in?
So I think you're completely correct with that. We have seen a delayed spring market is what this is. Everybody was gearing up. They were ready to get their houses listed. Everybody was excited. They were looking at what house prices were doing. We were looking at what was happening in the market, and there was a huge upswing. And then everything hit the brakes with COVID, the restrictions that were there, where we were being told that only those that have to sell must sell, or only those, that must sell are the ones that are allowed to sell. So as restrictions loosen up there, we're going to see everybody that's been waiting for the last couple months that were waiting for the spring market to list their home. I think those ones we're going to see an influx come onto the market there. But we're still, like right now, if you look at our months of inventory, so that means if every single home that was currently listed sold, how long would that take? We're sitting at 1.4 months worth of inventory for Simcoe County.
What's the normal?
So anywhere when you're in a balanced market, so it's not necessarily a normal, that'll just dictate whether we're in a seller's market, a buyer's market, or in a balanced market. So anything under 5 months, we're sitting in a seller's market. When we're 5 to 6 months of inventory, we're in a balanced market. And then whenever it's 6 months plus worth of inventory, we're in a buyer's market. So we haven't been in a buyer's market in a long time. So I think just even, and that goes back to the whole, you can look at where all the buyers are coming from with the GTA, and then everybody already within Barrie and surrounding area, like we've got, the demand is there for it. So that's why I can't see, and again, I wish we had a crystal ball to be able to see what was going to happen, and I'm sure you would too, but that's where it's hard to tell exactly what's going to happen, and we won't know the full impact that COVID has had with small businesses and people that are in a position like all your landlords currently that aren't able to collect rent, if they're in a position where they're going to have to sell their properties, or what the situation is there. And then also everybody that's had their deferred mortgages. So we'll see what happens, and we'll know better going the fall into winter, I think.
Amazing. Well, thank you so much for that, both of you. We don't have any more questions on the chat. Is there anything else to add before I think we're at the 20+ minute mark now.
Yeah, so I will just say, like, thank you so much for coming on, Chantal. We really appreciate your expertise in this. We have a lot of viewers that tend to watch on the replay. So if there's questions that come up, we'll just tag you if you're okay to answer them in the live chat.
Yeah, thank you so much for having me. It was a pleasure.
Thank you.
Ladies.
All right. Have a great day, guys.
Bye. See ya.